Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, May 5th. You all know the Moose, John Mousseau, CEO, Director of Fixed Income. John, we had some intra-week volatility, and we can talk about the different indices and how they're trading, but really what it comes down to day to day is some of the bank action.
Absolutely. That was the controlling feature this week that really even overwhelmed the fact that the Fed raised another quarter point this week, that the fact you had a good jobs number today. You had a lot of volatility in bond yields, not because of those numbers, but because of the banks.
Right. I know you have a chart you wanted to take a look at with the viewers.
And not to be too complex about it, but what we did is we took the regional, a number of regional banks and looked at their 10-year bonds and what they were yielding prior to beginning of March when Silicon Valley Bank and all the meltdown since then, and where they're trading now. And the uptick in the yield spread over Treasuries, and what that means is how many basis points over the 10-year Treasury bond are they yielding, has expanded greatly. And what it is a expression of the fear of fear. And we've seen it on the equity side in bank stocks. We see it in the bond side of bank stocks, particularly regional bank stocks and regional bank bonds. And the difference is really the haves and the have-nots. If you look at the big banks, the Bank of Americas, the Wells Fargos, et cetera, they've barely budged.
Right.
But you look at the regional banks and the idea is like smaller, maybe a little weaker. That's the perception. And it's showing up in the market.
Yeah, and it'll take time. One thing I wanted to point out is we've been through this with regional banks before.
Absolutely.
I want to share a chart with our viewers. This is a drawdown chart that I wanted to focus on for KRE, and that's the SPDR S&P Regional Bank ETF. And if you see circled on this chart, it's the two previous steep drawdowns. When were they? 0809. KRE down 56% in a 6-month period. Then COVID. Don't forget, when COVID hit, it was only 3 years ago. It seems longer than that.
And it was the end of the world of everything.
That's what I'm saying. When we were going through March and April and June, July, it was difficult to know what the economy was going to do. Banks often are linked to the economy and interest rates, obviously. Look where we are on the right now. We're right at that 40% drawdown on a 6-month rolling period, peak to trough. Why do I put this up? Do I put this up to say, start buying regional banks? No. Do we own regional banks? No. What I put this up for is you have to have the ability to keep an open mind.
Absolutely.
And often when you're getting hit with headline after headline after headline, you can close your mind to possibilities in trading and investing. Remember, we're talking about short-term buckets, that's trading, and longer-term buckets, that's investing. When you look at an ETF like KRE, as banks fail and get booted out of the ETF, you're left with the survivors. And if you look at some of the moves after the last 2 significant drawdowns, they're not moves you can ignore.
The ETFs become somewhat self-cleansing.
Exactly. Really. And ETFs in general tend to do that. And the big daddy of them all is the S&P 500, which as poor companies get dropped, whether they get merged or bankrupt or drop out or fall to a lower index, mid-cap 400 replaces
Absolutely.
A stronger one.
Right.
So we're going to keep our eye on the regional banks. We're not going to make any big bets right now. What are some of the things that could start to stabilize this banking sector? Well, what if the FDIC makes some adjustments to the FDIC insurance limit? What if they boosted it from $250 to $500 or $1 million?
Right.
And started to put a floor on the money pulling out of deposits, started to put a cap on fear. Because banks and equities in general trade on confidence. When there's a lack of confidence, the sell button is what gets hit.
And that's fear of fear.
Fear of fear. So nice earnings out of a number of big names this week. You can find fault and pick on Apple, but very strong yesterday. Happened to be one of the things that probably spurred today's rally. Some of the commentary about the bigger banks being asked or forced to kick in an insurance premium to the FDIC gave some of those smaller banks a lift today. We've seen it before. We're not going to just jump at those. Just keep an open mind. The best traders in the world, the best investors in the world, keep open minds.
Absolutely.
You hear us say continually, what can go right, what can go wrong. So we'll bring this chart up from time to time. We're going to get an opportunity. It may be 30 days from now. It may be 3 months from now. It may be 6 months from now.
Absolutely.
So, well, thank you very much. As always, we're going to give you a derby pick. Now, John and I have been right around the winner the last 2 or 3 years, but we haven't had a winner. Who do you like this year, John?
I like Kingsbarn, and he is in the 6th spot, and he's being ridden by Jose Ortiz, who won the Preakness last year. And you look for some value picks, and I think he'll be somewhere around 11 or 12 to 1 as they go off.
Yeah. He won the Louisiana Derby. In terms of my pick, I was going to give you a really nice, juicy pick. Skinner, be about 20, 25 to 1. He scratched with a fever today. So I'm going to go back to the winner of the Bluegrass, and that was Angel of Empire. Solid closing kick. We'll see what he's doing. Do not go to sleep on the Japanese horse.
No.
That's Derma Sotogaki.
Right.
Good early speed and does have a nice late pace figure to him. That would be something. Come across the ocean and win the Kentucky Derby.
You bet.
Okay, we hope everybody enjoys the Derby. We'll be back next week. We'll try to give you a couple thoughts on what we see through the financials and banks next week as well. Have a nice weekend.